Hello and welcome to episode 7 of my Road to 400% trading journal. This trading journal covers the Ranger algorithm. So this is an expert advisor that trades the Forex market on 3 different pairs, and it has a successful trading history of 10 plus years. And it's been forward testing in the market for the last 11 months with no losing months. So in this video I'm going to be covering back testing, how to properly do it, and also how to change the settings in the Ranger algorithm, and how to maybe find better settings or settings that fit your needs. And this video will not just be good for the Ranger algorithm itself, but it will be an important video for you to know how to properly backtest other strategies, not just the Ranger, but other strategies or tools, so you are better prepared for fully automated trading. Alright, so before we get into the back testing of the Ranger EA, I want to show you an update on the stats for this week. So this is the Oanda account with 50 to 1 leverage. So this is the low risk account. 300 pips this week, 32 trades, 0.21% profit. Profit every single month since October of 2019 on this test account. Alright, the next one is the Trader's Way account of 500 to 1 leverage. And 500 to 1 leverage is how to take advantage of the Ranger EA in its fullest, so I recommend using 500 to 1 leverage. So far this week, or what we did to close out the week, was over 330, almost 330 pips, 1.57% profit in 40 trades overall, profit every single month since January of this year. And so we currently have a couple of trades open. All right. So this is at Trader's Way as well. This is a live account, 7.26% profit overall, and 1.89. So this is almost 2% profit this week, 347 pips profit, and 39 trades overall. So a couple trades still left in the market, holding over the weekend. All right, so that is it for the test accounts and the tracked accounts for this week. Really good profit, a lot of trades, and just about everything closed out. So we're looking very good. All right, so here we are on MetaTrader 4. So I'm going to go show you the process of how backtesting works. Now, backtesting is one of the most important things to do in trading in general because it's how we build strategies. We build strategies based on previous data, what's happened in the market in the past, and in the hopes that something similar will happen in the future and we will be able to profit with using a certain strategy or technique. And I find that a lot of traders don't do enough backtesting or know how to do it properly to make it beneficial in their trading. And then because that lack of knowledge or that lack of dedication, it results in a lot of losses for most traders out there. So how long should you be backtesting for? I would say a minimum of 5 years and preferably 10 years. And the reason why is because the markets go through phases. They go through phases of trending, phases of ranging, phases of being flat, and there's the huge news, political events that happen that cause erratic behavior. So we need to know how our strategies can handle those market phases, because most strategies are built for one thing, to do one thing well. That is to either trend trade, or to maybe range trade only, or to scalp. But most strategies are not robust enough to do all 3 of them. They typically will be able to do only one thing well. And the problem is that we never know when the market is going to go through its phase that makes our system profitable. And when it's going to go through its phase that makes our system lose. And that's why backtesting is so important, and why you should be doing it longer than 2 to 3 years. Now, a lot of people do visual backtesting as well, and visual backtesting is pretty important, but it's a little bit harder to gauge when and where you would actually take trades because you don't know what's going on behind the scenes. Is there news coming out? Is there some other indication that's causing you not to take that trade because of discretion? And so visual backtesting is a little bit inaccurate because you don't know what's going on behind the scenes. When it comes to an algorithm, like the Ranger algorithm here, it's taking these trades based on a rule set. So it's not using discretion. It's saying once the RMI is in an overextended location, up or down, then it's looking for a candle pattern to enter its trades. And once that's met in combination or in tandem, then that trade is executed. So it does not use discretion. And the thing is, with algorithms, and the algorithms that most of us retail traders have, are not sophisticated enough to really mimic discretion. Some of the banks and institutions have that technology, but unfortunately we just don't have it yet. Okay, so let's get into how to backtest the Ranger EA. And this goes for any algorithm out there. So it's not just for the Ranger. This goes for if you're serious about auto trading for your future when it comes to Forex trading or anything in general. This part of the video is extremely necessary and should be beneficial for you to know how to backtest a strategy properly, so you're better prepared for how it will trade in the future. Because the results are not always accurate as you may think they are. Okay, so the first thing you're going to do is I'm going to move my face over down to the right, and we're going to go over to Tools. Now you can see at the top, I just circled that. Tools is what you're going to click on, and you're going to go to the History Center. And for this example, we're going to find the Aussie Canadian dollar. So we're going to go over FX crosses, we're going to find the pair, and we're going to click on the 1 minute in one, and we're going to download that data. Click download, and it should take anywhere from a couple minutes to maybe 10 minutes based on how fast your internet connection is. Okay, once we download that data, we go and hopefully we've installed our Ranger EA or some other algorithm to test, and we click on the drop-down menu here, and we should select our Ranger algorithm, and this one I have the Aussie CAD and New Zealand CAD selected, which is the correct one for trading the Aussie CAD Canadian dollar. Alright, so we now select the symbol, and that is the Aussie CAD, and the model right here is we're going to select control points first. Typically I only deal with control points and every tick. Those are control points is the least accurate of these two. Every tick is more accurate, and it's the most accurate that MetaTrader allows us to do within the software MetaTrader itself. There are other ways that we can get more precise data by going outside of MetaTrader, and I'll get into that a little bit later. Okay, so the next thing that we're going to do is we're going to select the period. So this is, I am blocking that, so we're going to go back up. All right, so the period is going to be 1 hour, H1. Okay, so we're going to select that for the Aussie CAD and spread. So this is really important as well. I've seen some people use current, and I would just use the 3. So 30 means 3 pips for the spread, and this is the average of what I have at my brokers. Typically I range from 2 to 4 pips almost all the time at an ECN broker. So if your spread is higher than that on average, I would find another broker. Alright, so now we're going to go into the EA settings. So this is, I'm not going to talk about all these as they are already described in the PDF manual when you download the demo of the Ranger EA or use the live version as well. Okay, so all those things are explained, and if you have any questions, you can let me know later. So the ones that we're going to be dealing with today are the stop loss. So this is what we're going to be adjusting today. Stop loss. We're going to be adjusting changing the close by pips profit. We're going to be changing close by percent loss. Oh, that's percent profit. Percent loss right here. Okay, and the next three options that we're going to be looking at as well are the Martingale 1, 2, 3, and also the multiplier. Okay, so the first thing that we're going to do, and this is using the default settings of the Ranger EA, first thing that we're going to do is we're going to check out the stop loss setting. Alright, so the stop loss is 100 pips stop loss on each individual trade that the Ranger takes. Okay, so with the default settings, this is what the algorithm looks like on a 10-year test. And I forgot to mention about these settings at the bottom here. These are really quite important. So you need to click these two boxes right here so you can change the time of when the test starts and when the test finishes. So this is from 2010 all the way to current date, 2020. And you need to click that box in order to change those times. All right, visual mode. This is so you can see the graph. And this is the graph that we're talking about right here, and the results as well. So you need that clicked. This is the speed of the test. I would move that all the way to the top and skip to 2020-822. So this means that if you don't want to watch the test and watch it go, it can take longer. If you skip it, it will increase the speed. So I recommend doing that. Okay, so going back to the settings, the default settings shows you this, 15% drawdown overall, a 1,000 account going to 4,160. Okay, so now we've changed one of the settings, which is putting a 100 pip stop loss on the trade. So now we're going to start it and see how it goes. Okay, so you can see where the stop losses are getting hit, and we're going to show you what the chart looks like so you can get an idea of what is actually happening with that setting. Okay, so here's a good place to show you. As you remember me telling you before, we have trades right here. Ooh, that's a little bit too big on the marker. So we have 1, 2, 3, 4, 5, 6 trades overall. This is called a basket of trades based on a grid. So we're entering trade 1, 2, 3, 4, 5, and 6. Okay, and they're based on a grid. So that means that every allotted pip amount, in this case 20 pips, we're entering a new trade after that, looking for the market to, if it's going up against us, eventually it will fall back down and we close out all the trades for profit right here. But since we have a 100 pip stop loss on each individual trade, the first 2 trades hit stop loss, one right here and the other right here. The rest of the trades came out into profit, and we were able to have a bit of takeaway, probably around break even on this because 2 of the trades came out in loss. Okay, so not very usable because you can see here for a period of a couple of years it was falling, and we don't want that because that's not going to give us the profit that we're wanting, although it was still profitable from the beginning all the way to the end of the test. So not bad, not a bad start. So let's increase this. Let's increase this to 200 and see how this goes. Okay, so this is already looking better. As you can see now, less trades are hitting that 200 pip stop loss. You see sometimes that it does happen. Like, let's see if I can find a place. Okay, right in here. So this is showing that one trade at the very top hit its stop loss right at the very bottom before the rest of them came up and exited for a total take profit. So one trade out of that entire basket of, that's a pretty heavy basket, but sometimes that's why the strategy is made like this, is so it can, when it has that bad trade, it's able to recover. And so able to recover, in most cases, within a 200 pip allotted pip amount from the very original order. Okay, so looking pretty good. Still a bit of a messy area right here, which could cause people to stop using the strategy because they see it losing for a few months or maybe even a year. So what if we change the stop loss setting to 300? What's going to happen now? And this is the last setting that I'm going to go over when it comes to stop loss, and I'm going to move on to some of the other settings so you can adjust those as well. Okay, so now you can see that 300 pips is not getting hit almost ever. There was one place that it was taken right in here. I don't think it was really hit much anywhere else, at least we don't really notice it. So that means that we can handle a small moment or 1 or 2 months within the strategy that was going through a loss, and the rest of it was profit. Okay, so what does that look like on drawdown and profit expectation? So the drawdown from the original default settings now taken down by about a percent, okay, and the profit is also taken down a bit as well because we're still accepting some trades as a loss. Okay, so now the next thing that we want to adjust is we're going to remove the stop loss setting, and we're going to try now profiting extra pips. So we're going from profiting 30 pips per trade, or 30 pips in a basket of orders, total 30 pips. We're going to move that up to 50. And we're going to see if the strategy is able to survive, increasing the take profit amount by what is it, 70%, 70 or 80%. And so we're going to see if what it does. And look at this. Now we're showing that the strategy is capable of withstanding that kind of increase in profit on each trade. So now we're looking at a maximal drawdown of 17.22%, but a relative drawdown of 42. So this is something that we now need to worry about, because the 42% is a little bit high. And what that looks like is relative drawdown is a ratio between the maximal drawdown and the value of the corresponding local maximum of equity. This coefficient shows losses in percent of equity experienced by the expert advisor. So that's something that you should be aware about, and it should be considered. If I was doing a backtest, I would be looking not at the maximal drawdown here. I would be looking at the relative drawdown. Whatever the highest number of these two is, that's what you should be considered, or that's what you should be considering. Okay, so 42%, a little bit high, but we're also taking quite a bit of profit here, turning a $1,000 account into potentially $10,000. But the problem is with control points testing is, just read it. A very crude method based on the nearest less time frame. The results must not be considered. So control points is the least accurate test that you can do, but it can show you the potential of a strategy where the losses were happening, if the account blew, if the what other small problems that happen within the strategy. But you can't consider a $1,000 account is going to turn your account into $10,000 in a 10-year period of time. That can't really be considered, because this type of testing is so fast that it's not really getting every trade accurate when it comes to the all the settings that you have within the expert advisor. Okay, now since we know that 50 pips take profit is working, let's try to see if we can work with one of the Martingale settings. Okay, so Martingale 1. Martingale 1 means that our first order is going to be 1, second order 2, third order 3, 4, 5, and 6, and so on and so forth. So every consecutive order increases the risk size by that amount using Martingale 1. Martingale 2 is going to be start with 1, 2, 4, 8, 16. Okay, so that's Martingale 2. So it's more risky. That means that you have more potential to blow your account, but you can also make more profit as well. So be careful with Martingale 2. All right, Martingale 3. Martingale 3 is like this: 1, 1, 1, 2, 2, 2, 4, 4, 4. So that is Martingale 3. It is probably the least risky out of all the Martingale settings within the Ranger EA. Okay, so this is the lot multiplier. So this setting at 2 means that our Martingale 1 and Martingale 3, when it increases in risk, it's going to be 1, 2, 4, 8. It's a double up. That's what the 2 means. 2x. Okay. Now if we change that to 4, it's going to be 1, 4, 16, and so on and so forth. Okay. Hopefully that makes sense. Okay, so now we're going to leave this at 1.5. So I think that's the lowest the algorithm will let us do, and we're going to see if this is going to survive. All right, so we're really pushing the algorithm a lot here, and this is what some people do if they're big risk takers, or they have a small account and they're trying to grow that small account into something big. And so you can see that it crashed and burned, and you can see 94% drawdown. Everything blew up, and that's when you're like, okay, this is too much. I need to turn this down. So I'm going to turn it down to 40 and see what we can do with that. And see if 40 makes it. Okay, it's looking pretty good. And it's almost done. Okay, now we know that the strategy didn't blow up at 40. And our drawdown, it looks pretty good. It's the maximal drawdown and relative drawdown are almost the same, or actually they are the same. And look at the profit potential now. We went from 1,000 in our original test to 5,000, and now we're going to 54,000. So again, we can't consider that total net profit as takeaway because that number is not accurate, but it's showing us that there's a lot of potential with these settings. And so we should dive deeper into them to see if we can get more accurate with our tests to see if we can push this to a more accurate level to be usable in live trading. Okay, so now we're going to try to increase the risk factor. Now, risk factor is the auto risk included with the algorithm. It considers your leverage and it considers your account balance. Okay, so 1.5 means that we're going to be increasing that by 50%. Okay, and we're keeping all the rest of the settings the same. The take profit at 40 and the multiplier at 1.5 using the Martingale 3. And we're going to see how this goes. So this should bring us a little bit more profit than the last test. And we're going to let this finish. And this is the last test I'm going to do with this in this video because we're already going pretty long here. Alright, so now we've increased the drawdown to 50%, over 50%, 52, 52. So that's pretty good that the relative drawdown and the maximal drawdown are the same. If there is a pretty big difference between them, then there could be more discrepancies. It's not always a bad thing, but it's something that you should consider or at least notice. Okay, so now we're at 470,000. Okay, so now we just went from 54,000 to 47, and this is including compounding with the algorithm. The algorithm does compounding automatically, and so that's why it's able to grow, increase the balance size and risk based on the account size. Okay, so now we're at 470,810. Okay, again, can't consider that number as actual profit because you might be, whoa, this is crazy. I can make so much money with this algorithm. It's not as dreamy as you seem. And a lot of people will show you these tests to manipulate you and to get you to buy something that's going to blow your account because they run tests like this and block out this information, what it says right here, and the stuff in red, the results must not be considered. They block out that, they erase it out, or they don't show you the data behind it, and you get duped into buying a strategy that's going to blow your account and it's not going to be accurate. Okay, so now since we found our good settings within the algorithm with control points, now we're going to go into an every tick test. Now every tick test is going to take longer. It's also going to show you more accurate numbers when it comes to what it shows you at the end of the total net profit. It's not going to be 470,000. It might be something like half of that, or maybe a little bit less. But the number will almost always be less than that than what it showed you in the control points test. All right, and the drawdown should be the same or close to the same amount. It could be a little less, it could be a little bit more, but that is the next step. So control points tests first, see if the strategy has potential, then move to an every tick test. And MetaTrader says this is the most precise method based on the available at least time frames to generate each tick. It's still not that accurate. So if you see like a backtest up online, I think I even have some on my website, it's still 90% modeling quality. That means that there's still a 10% area for errors or price data to not be accurate. So keep that in mind, right? So what is a way to get around that when it comes to backtesting our strategies? So now I'm going to pull up this. This is using tick data. So this is every tick data that you can actually purchase online. Now this goes into the last part of this video, and this is called earview.net. So this is 99.99% modeling quality when it comes to backtest data, and I'm going to show you what that looks like on the test right here. So this is showing this is an every tick 99% modeling quality, and it shows you even that it is right here 99.9. So that gets away a lot of the improbables there, and it gives you a lot more accurate data to really trust at this point. So when you see a test that shows 99.9% modeling quality, then you know that the strategy has gone through the best testing available, and it likely will perform very similar to how that backtest was performed. Okay, so that test that I just showed you, I ran an every tick test with those same settings that we showed right here. Okay, that showed 470,000, and so look how different the data is. Okay, so it went to 343,000. So this is much more accurate data, and it also shows a 41% maximal drawdown and a 56. So the drawdown is actually pretty close with the strategy, and in some cases it could be quite a bit different. And the more different that it shows you from the control points or every tick test in your data compared to the 99.9% modeling quality, then there are more discrepancies and the strategy is not very solid. It means it's not going to perform very well over the longer term. So here we have our modeling quality, all right, and it shows very good results, and that's with the use of the Martingale. That's with the use of increased profit per trade, and I can go over the information here. All right, so these are what the settings are, and these will be going likely, something like this will likely be going out in the next Ranger EA update. You guys can change these settings right now if you want. If you're using the demo or if you're using the live version, you can change them right now if you want. It's up to you, but this will be going out in an update probably tomorrow, August 23rd, or even on the 24th as well. Okay, so now, how do you implement every tick data? So once you go to the website and you download the software, and you can download it for free for 14 days. I'm not affiliated with this company, but when you want to buy it, it does cost a lot, and that's unfortunate because not everybody can afford to do this. But if you're an algorithmic trader and you want to be an algorithmic trader, you should consider purchasing something like this, the data, because it will show you more accurate results of the strategy you're wanting to use. And you can trust them. You can trust that data. Because I did a side-by-side test with my live data that you see here. My live data here and here. And I did a comparison to see if the orders matched up exactly, and they did. Almost exactly to the second they were entered, which is pretty impressive that modeling quality can be that good. Okay, now, so once you sign up for a free trial, you can try it for 14 days. So if you're really considered, or if you're trying to find something that is a really good fit for you when it comes to an algorithm, try that 14-day trial, and so you can do the proper testing for it. And if you're really interested in more algorithms after that, I recommend purchasing a package after that. Okay, again, I'm not affiliated with this company in any way. All right, so this is what what it looks like. The software, you can download the data. I'm not going to show you how to use it since this video is already too long, but you can download the data from this the software, and it integrates directly into your MT4 automatically. You can use it has this button arrives, and this is what this button shows up after you download that software basically, and you have to click use tick data, and you can adjust the parameters. And once you're in the tick data, this is the last thing I'm going to be covering in this video, you need to make sure and click these 4 options. Simulated live execution. These need to be checked. It's crucial when using tick data, and this is not just for the Ranger strategy, this is for every strategy out there. Okay, so now I wanted to give you guys these tips, and that's pretty much it for this video. I apologize for it being so long, but I knew this one was going to be long, and it's incredibly crucial for any of you guys that are wanting to do algorithmic trading in the future, because that's what we are. We're in the future right now, and so many strategies and individuals and companies and institutions are now using algorithms to do most of their trading. And so there isn't a better time to be learning this technique and how to do it so you can better prepare yourself for your trading future. All right, hope you guys like this video, and give me a like if you like, and also subscribe if you can. See you on the next one. Bye.